What's good, guys? This is Michael St. Clair with the Vested Society. I am here with my co-host, Brandon Darby.
What's up?
What's good, Brandon?
Just staying alive.
Yeah,
Yep.
it's a
How are
good
you doing?
motto. It's a good motto.
Hmm.
Because I think with the markets, it's like, you can't really. I think everyone focuses on making big winners and getting good trades, but like, end of the day, it's like you have to be good at losing. You have to be good at managing risk and, making sure your losers are not bigger than your winners. So.
Exactly. It's a longevity game.
Yeah, it seems like the markets are at all-time highs again. It's completely different tone. I mean, compared to like what, a week, 2 weeks ago when people were afraid
Hmm.
I think FOMC was a bit volatile as well because we had people worrying that the Fed might try to raise rates this year. And
Yeah.
yeah, I mean, what the hell's going on now? Yeah.
Yeah, I mean, I don't know. This is not a new theme, right? Like a strong market despite equally bad or worsening geopolitical, inflationary, everything kind of concerns, right? Interest rate
Mhm.
concerns. But I don't know, we're in the midst of earnings seasons and we see all the relevant companies continuing to report pretty strong
Mhm.
earnings. Spending across the economy still seems to be pretty good. So, you know, math makes sense if you look at it a certain way.
Yeah. You take a look at crude. I believe crude fell about 4% yesterday.
Yeah, we're looking close to an agreement, right? At least that's what the headlines are.
Yeah,
So,
when is the headlines ever like mm,
mhm.
accurate? Because you always see all this bullshit, especially with the current administration. We have a lot of back and forth negotiating, this and that, You hear one
Right.
thing one week, another thing the next week.
What's up,
I
my
mean,
goems?
Yeah.
huh?
What's up, my goems?
The,
IBM looks good for continuation, bro. Our plays
Yeah.
are looking saucy.
Yeah, we'll get to that in a bit. Wow, oil's down 4.4%. Yeah, Besant, Besant.
Scotty, your boy Scotty.
Yeah, he said Strait of Hormuz deal might come this week. So,
Oh, if
woo.
that happens, then we go to the moon, bro.
I mean, again, like, do we actually think the deal's on, or is this some sort of like
Nah, I think it's
headline
some bullshit.
bullshit? You know?
They're gonna load up. They're gonna load up on oil at the bottom, and then
Yeah, you know the name of the game. Just buy low, pump the headlines, profit.
that's kind
Yeah.
of I feel like that's been something we're seeing, right? Like
insider
it's
trading.
almost like, yeah, insider trading, but basically the market as a whole treating geopolitical risk like it's a day trade in the sense that they're not, I don't really know how much the market is pricing in the actual long-term prospects of the war as much as they're just trading off of these headlines and press conferences and whatever.
I would agree
So,
with that assessment. Yeah.
yeah. What's the term? I think I've seen it before. We're kind of in a period of headline fatigue where very like, the oil market specifically, it's just become so beholden to these just verbal interventions, right? And
Mhm.
it's become a less reliable indicator of actual long-term outcome.
Right. Yeah.
And these, well, and today is kind of case in point for that. But then you have to ask the question at some point, the relevant policymakers, are they going to be able to churn out another positive headline? And if the answer is no, then what happens? You know?
Mm.
So
Yeah. Those are all interesting questions.
yeah. I think
Yeah.
one other theme that I've been thinking about that this kind of ties into is, and this goes back as early as kind of the Liberation Day fiasco,
Hmm.
is investors as a whole seem to kind of be tiring of like really realizing the effects of bad news
Hmm.
and just assuming by default that any crisis that comes up will eventually resolve itself, right?
Right.
And so it's been working, but eventually it's not going to resolve itself, right? And that's just another risk to consider too.
Yeah. It's a lot of what ifs. A lot of what ifs.
Yeah. But these are the things that I think we should be thinking about when we're making
Oh, for
fresh
sure.
all-time highs,
For
is
sure. We always have to consider all these
flip side.
different scenarios.
Yeah.
What do you mean, bro? I thought we go all in.
Yeah. Yeah. I will say, if we do, in the best case scenario, we do stick and Strait of Hormuz opens, with cheaper oil. I mean, I think that brings like the inflation scare off for the second half of this year.
Hmm.
So I think if you take that away and then discount rate stops being a threat, which should lift the long duration end of the market first, and then the rest of it should go up shortly after. So
Right.
again, big what if, but it's something to consider as well.
Yeah. Well, I mean, inflation might actually be helping certain parts of the economy that are actually driving the markets up right now anyway, right?
Yeah.
I mean, we were talking about corporate profits earlier. Like the economy that you and I are the average individual is going to feel is super different from the economy that, you know, large corporations, which may have earning and spending
Hmm.
improved to a limited degree by increasing inflation, right?
Yeah.
And that's ultimately what really matters as far as the number we see.
Hmm.
Um, so yeah, two buckets feeling very different economies
Yeah.
at the same time.
What a good
Um,
coin.
Let me ask you this. Do you trust this rally? Because we, I would say, especially yesterday, it was mostly big tech fueling this rally. I mean, let's see. Let's look at the sectors right now. Because tech is all green, financial services is a mix. Consumer cyclicals it's a mixed bag. Utilities are down, real estate's mostly red. Yeah, it's just yeah, it's pretty
well,
much fueled by
what
tech.
do you mean? What do you mean by trust?
I mean, you think this rally has legs, or you think this is going to be another situation where we chop in a big range as we have been, basically?
Well, I mean, part of it's corporate profits, corporate
Mhm.
earnings, and then part of it's the geopolitical headlines like we were talking about. So in that sense, I guess I don't know. I don't know. I can't predict the catalyst that we'll have, but as far as the earning driven rally, I mean, those in theory at least are real numbers, right? So we
Mhm.
are seeing increasing strong corporate profits. We are seeing consumer spending kind of holding up.
Yeah.
So yeah, I guess could you make the argument that we have strong corporate profits and so the businesses are healthy, maybe there are rising costs, but they're successfully passing it down to consumers and the consumers are absorbing it. So if that's true, then, you know, yeah, I guess I trust it, so to speak.
Okay.
But yeah, I trust it in the sense that I believe the numbers are real. So that being said, it doesn't mean the economy is necessarily in good shape for the majority of people, right? But
Yeah, but when is the economy and the markets really like fully correlated? Like, ever since what?
yeah,
I mean,
no,
2020, we haven't seen that correlation really.
the economy is definitely not experienced equally. That's for sure.
What's the exact term again where like, it's like, it's splitting, like
Disparity.
disparity?
You can always count on Brandon for vocabulary.
I mean,
Mr. Commandeer, bro.
he did go to Harvard, so
You mentioned one thing I was curious about your opinion. You mentioned interest rates earlier. What do you think? I mean, of course, it's relevant,
mhm.
day to day, but what do you think about the impact of of interest rates for things like, okay, let's think about what most people care about. Borrowing costs, right? Mortgages, loans, even like I guess stock valuations to an extent. Interest rates effects on that versus the bond market and like longer term bond rates and whether the Fed even seems to have as much control over that now.
I don't think the Fed has control. They always spew their like little spiel, but like again, everything is fine and dandy as long as the market trusts the Fed and that they follows the narrative. But once that
Right.
you break free of that narrative, that's when things get really fucking crazy. So I don't know. When it comes to interest rates, who's the new Fed chair, whatever his name is, what's his name again?
1 second. My
Yeah,
bad.
I would say like there are fears that because
Yo, 1 second, 1 second.
we did have dissenters last meeting where like the Fed was a bit more divided on the rates.
Hmm.
So you do see the Fed fund rates futures, reflecting that, and people are afraid of, oh, potentially we might have some interest rate hikes this year. I think it's early to say. I don't think. I think unless things start breaking down and like being more concerning, I think it's kind of a non-event at this current point. I don't know if you agree with me
Hmm.
or not.
What's a non-event?
Interest rates, the Fed raising their Fed funds rate three times this year. I mean, that's what people have been betting on
Mm-hmm.
a bit recently with the current FOMC, with the last FOMC.
Yeah. Well, I guess what's interesting to me is that even now, where the Fed has, I think net were, what do you know the reduction basis points year to date so far? I forget, but
I
I
don't
believe
really
it
know.
is a reduction. And currently, we've been holding,
Mhm.
but we look at the long-term bond yields, right? And they've been slowly, but pretty steadily rising, right?
Yeah.
So it begs the question, right? If the Fed were to, let's say, to do nothing, not even raise rates, we can still see borrowing costs rise,
Hmm.
possibly tied to investors losing confidence either in inflation
Hmm.
or or just kind of government spending, right?
Yeah.
So yeah, I mean, the Fed may control short-term rates, but if we look at the rates that actually affect a lot of everyday life, that's where maybe one sec. Sorry. That's where the bond market may actually have more control.
Yeah. Well, I don't think the Fed ever has like real control. It just could signal, with the Fed funds rate. And
Yeah.
as long as the narrative is believed, then the markets tend to generally fall in line. But
Hmm.
Once the credibility of the Fed is lost, then ooh, that's when things get really crazy.
Yeah, and I guess that's another dimension to your earlier question. Do you trust the rally? I mean, I guess, yeah, I guess we also have to ask ourselves, okay, how high can we see these long-term interest rates climb before they actually start to affect equity valuations? I don't know, but
Well, I mean, again, depends on the narrative, you know.
mhm.
The market can be very disconnected from reality longer than, yeah, I just could. I mean, we see this time and time again. The market can be very disconnected until like reality hits, and then all of a sudden, oh shit,
Right.
market starts readjusting. Very violently or dramatically. So,
Yeah, but I feel like this, so I don't know what's up with my voice. I think this, I mean, this trend we've seen, I'm trying to look at it to understand what the main worry that these bond investors are seeing, right? Is it inflation? Is it, I mean, government debt is a real long-term risk too that we never talk about, right? I mean, it's beyond snowballing at this point. And I bet I'm sure that's a big reason that these long-term rates continue to climb. As well as like I said, the Fed just straight up losing credibility at this point, you know? So,
I mean, on the inflation thing, I do think that longer term it's going to be an issue.
mhm,
When has the Fed ever like effectively done its job?
mm,
I mean, there's a term for it, the whiplash effect. Generally the Fed tends to overshoot when it comes to
mhm,
rates. They usually because when they do raise rates or lower rates, the transmission channels it takes what 6 to 8 months for it to take real effect. And
mhm,
again, I think that's where the Fed is holding and waiting to see whether or not these effects have really solved the issue.
mhm,
Yeah, I would say. I mean, it wouldn't surprise me if we do see inflation roaring back sometime in this decade.
mhm.
So that's my take on it. I'm not a macro expert by any means, but again, I would say we might see an issue. I don't know, who knows, like 2027.
Yeah.
Again, I can't really give a timeline because, the timing on these sort of things is quite difficult. I mean, we have a lot of macro experts in the last what few years saying like, oh, recession's coming, this and that, and blah blah blah. But like, have we seen that really play out?
Mhm.
Nobody knows what's going on, bro.
Yeah,
Nobody knows what is going on. Like no one can explain these stock moves. The only way I could tell you to get ahead of it is by reading the tape.
yeah,
Well, ironically, these stock moves might actually be driven by inflation itself, right?
Like
I'm not mis-
I'm really thinking these numbers are getting less and less significant. Like, we're looking at these like yeah, they matter, but at the same time, like I don't think they matter too. You know what I mean?
yeah.
Like that, like you guys were talking about, is so decoupled from what we know as the stock market. The trading has completely changed. Like you see, like look at Corey for example, bro. 30 handles in a few days. Like you're telling me that makes to any sense at all?
Yeah, I
And
don't
this
know
is
about.
consistent basis. Like look at these stocks. The way they're moving is just not normal.
Well, that's kind of exactly like I think there's this it's a bit of a two-part thing with the irrelevance, right? So I guess when I think of the inflation numbers or these other macroeconomic numbers not being relevant, I'm specifically thinking about, okay, relevant to the kind of quality of life things that we care about, cost of goods, cost of services, cost of borrowing.
Hmm.
But then I do think they are real and relevant in terms of let's just kind of think about this new kind of inflationary cycle we might be seeing now, right?
Hmm.
Traditionally driven by, okay, you have workers earn more, therefore they spend more, therefore they push prices higher, right? But
Hmm.
nowadays, with we have super heavy government spending, just keeps on, I think, escalating. We have equity and property prices rising, right?
Hmm.
Consumers own equity in properties, especially wealthier households that earn more equities in properties feel richer, right? Because their net worth on paper grows. So therefore they keep spending, right?
Yeah.
Businesses, you know, businesses that interface with consumer spending raise prices because the demand remains strong, right?
Yeah.
Then those those profits continue to push the equity prices higher. It's the whole, what's it called? Melt up principle, right?
I'm not disagreeing with you. I'm just saying that's why I changed away from being a news-based trader. Like it's not
Oh
like
yeah, no,
it doesn't make any sense anymore. You know what I mean?
yeah, I'm not.
I'm gonna bet you right now that once oil hits a bottom again, I guarantee there will be something that makes it spike again. And then whoever's at the bottom that bought those futures is gonna be cashing out.
Yeah, I'm not saying there are not lots of company valuations that don't make sense. I'm just trying to, you know, find ways to, you know, understand the today's like cycles. But
Yeah.
Well, that's the way you do that is you buy our options course, and we're having a special now for $300. Come and get your options course from the Vested Society. We'll show you how it's done.
Hmm. But no, Brandon's not wrong as well. I mean,
I'm not disagreeing with him. I'm not saying what he's
it,
saying
it is
doesn't have merit.
it is decoupled, like the markets and reality.
It just doesn't make sense. Like nothing makes sense. Like you can't. Nobody knows what's going on. Like you can have a grade analysis and it's still not gonna
yeah,
follow.
no, I think Itai and I are talking in parallel here. We're both saying
Mm,
roughly the same thing.
yeah.
But
Now, what do we think of AI?
I think also this is a sham, bro. Like to be honest, like I don't think anyone is really doing like they're not building shit. You know, it's just like they slap AI on their fucking name and then they just go out and look for funding and then that's where you get these big ass valuations because they have an AI, but they're not really like doing anything. You know what I mean? Like, yeah, they're building things, but not at the rate that I think they are. I think everybody's just trying to cash in on getting like an early seed investment and they have like this good idea and then it just,
Hmm.
it's just become like this one big scam almost, if you will. Like right now, you and I, we can go and slap AI on a company that we make, and we can go seek funding tomorrow. And if it's like it's some sort of decent idea,
Yeah.
even if it hasn't been built yet,
I mean, I know a founder, like, I'm not
like
gonna say his name.
now people are investing on what could be more than what actually is.
Yeah, I know a founder. I'm not gonna say his name, but he's pre-revenue. He has a product, but pre-revenue at seed was what, 100 mil.
It doesn't make any sense, really.
Series A's 500 mil now valuation. So
And then you're looking at these like AI models, like they're amazing, they're great, but in terms of revenue, I don't think it's
yeah,
sustainable to make money that way.
I think that's a big like issue, right? If they don't turn that around, I think it's gonna be. I mean, it could definitely shift the narrative quite a bit on AI. I mean, the costs of running, these
Dude, just on energy alone, like building a data center is expensive, first of all.
mhm.
And then you need to have enough data centers to have all your users. Then you need to have like maintenance on that. Then it's like so much money being shelled out.
Mhm.
And how are they going to recoup the money back? Like I don't see them turning a profit for a while if they do. And I'm talking about the Anthropics, ChatGPTs.
Yeah.
Like
Brandon, what do you think on this whole matter?
I mean, I think it's the same story, right? Like I guess maybe the intuitive way to think about it is kind of like a pyramid scheme right now, like in the sense that there are legitimately some companies that were rewarded for making legitimate sales of chips, data center equipment, etc., and they're
Mm.
turning real profits. We just, for example, look at Nvidia, which is, has just been printing money for the last 7, 8 quarters.
Oh yeah.
But that's stage one, right? So stage one is you reward the companies selling the shovels to the gold diggers. Stage two, ask, is any of that spending actually going to produce real profit to offset the enormous amount of capex that every single technology company seems to be having to spend or else be left behind, right? I mean, we look at the criticism that Intel was receiving, when was it? For
Okay, Brandon, let me ask you
last
this
year.
interesting question, right? What happens the moment some n- Chinese company decides to literally copy these models at a fraction of the price and are now available for global use? Then what?
Well, I mean, we're kind of already seeing that, right?
Well, but that issue is like very geopolitical because I was talking to a colleague of mine and he was saying, yes, it is way, way cheaper at a fraction of the cost. They're subsidized by the government and whatnot, but they're with the current geopolitical state, I think there's an issue with exporting those models overseas where it gets really fully integrated. I think enterprise level and there's like fears of, the Chinese committing espionage. There's always that risk. So I don't know if that, I do think that personal use, yes, it will make sense economically for people to use Chinese AI like DeepSeek. But again, I think that's a big friction point when it comes to the transition in that sense.
I don't know, man. This is just one fucking. I can't even explain what the hell's going on, to be honest.
Yeah, I mean, we talked about this pretty in depth already. I think it's pretty similar. I guess the one interesting thing we can look at though is see AI, like, because, we are still in the midst of the AI boom, right? And so
Yeah. I mean, we're in the beginning of the AI.
company spending is still
Yeah.
just rampant as far as expansion with AI. And again,
Yeah.
I think it's because companies are worried about falling behind. So like they can't afford not to spend on data centers, chips, power,
Well, that's what I'm saying.
infrastructure.
When does that become a fall off? Because like if
Well,
you're just spending money just to spend it, just to stay relevant, then is that really
right. So yeah, that's a good point, right? Right now, I mean, maybe it's shifting that way, but the market is seemingly not in a point right now where they're really punishing companies for not seeing return on their capital investment, right? Eventually that'll probably happen, but in the meantime, we do have all this spending. Companies are benefiting from it. Companies like Nvidia selling chips, companies selling data centers, but also, I mean, will we see this spending start to like it already is, but continue to monitor the spending affecting other sectors, right? I mean, this is also now kind of like we look at it as a technology boom. How about the aspects of like a construction boom,
Mm.
or looking at
that's what I'm looking at right now?
right, look at construction companies, industrial companies, utilities, right? These are all part of the expansion cycle. Freaking copper. So yeah, I mean, until we really see phase two start to come into play and companies really start to be scrutinized for real earnings. I mean, you know, yeah, a lot of lot of directions it could go.
Also, another point is AI is deflationary. It
Hmm.
does increase productivity gain, which is positive.
Yeah.
Hang on. We are running out of time on this Zoom. I think we have to do a new meeting, by the way.
Okay. I've actually got to bounce pretty soon.
Okay.
But how much time is left on the meeting?
1 minute.
Okay. Let's just call back then. I have a couple minutes.
Okay. Sounds good. All right. 1 sec. Fuck.
Oh my goodness.
Okay.
Sorry,
Well,
go on.
you guys can go over the small account after I go. Yeah. No, mainly just trying to understand the macro picture right now,
Mhm.
even before looking at any, individual trades. Because
Brandon wants the crystal ball. My crystal ball. Does he want the crystal ball? You can buy your course right now for $300.
but yeah, no specific setups I'm looking at
Mhm.
right now, regardless. I'll keep you
Are you
posted
are
on
you are
that.
you currently in any swing trades right now, Brandon? If you care to disclose that,
I just closed out Broadcom this morning.
or ABGO.
SoFi, believe you're in that one too.
You're in SoFi too?
Mhm.
Nice. What's your average?
Let's see, 1746.
Nice.
Solid, solid.
I'm in gold
Yeah,
and
long some gold and silver right now. I like it. I like it.
yeah. I think I actually just closed out like four this week. So if you asked me last week, I'd probably have more.
Hmm.
Yeah, so yeah, macro picture for me is number one right now.
Definitely, definitely.
But that's an evolving story.
Yeah, I think with the market moving quite violently off the lows, I'm not looking to open any new positions,
No, 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 no.
but
Yeah.
yeah, I would say ride the winners for continuation and see, where it
Yeah.
goes, trail your stop up, and
Yep.
yeah, I just gotta wait for the next opportunities. So
Exactly. Cash is a position.
preserving capital is a strategy. I think a lot of
Yeah.
people get it wrong. They tend to people have like this, a lot of traders I've seen, they have an issue of like they need to be in a position and they need to do something with their capital. They get impatient. They have FOMO, and I think that's a very bad mindset to have because I think that gets you in a lot of trouble.
We've all been guilty of that, bro. I've been guilty of that for sure.
Yeah, I would say pretty much everybody. I think it's human nature.
You want to feel like you're a part of something.
Hmm.
Oh, oh, something bigger than yourself.
All right, guys. Catch you later.
All
All
right.
right, Darby.
Good luck.
All right. Now into the small account challenge, guys. Right now, let's see.
Yeah, we're. How much cash do we have on hand? Five. Oh, here we
Five
go.
five bands,
5,500. Perfect. Oh,
55
good,
hundo
good, good
type shit.
Coinbase. Look at that. Soundhound. Let's go, boy. We really have a solid lineup. I really like that portfolio, to be honest. It gives us a good exposure for everything.
Hmm.
Coinbase was really unfortunate, fucking earnings, but it's all good. I think I can definitely see this rebound.
Yeah.
We're only 10 handles away. Oh, look at that. Nice, bro. Dude, what did I tell you about Oracle, bro? Sometimes you gotta be patient, bro. Remember our average was like 130 or something, or 135? We would have been up 10
What's
handles
what's Oracle at?
or 45.
Oh.
Sometimes you gotta be patient, bro.
Yeah, yeah. I think we were trying to manage that position very tightly and not take too much heat, but
That's why I'm letting Coinbase kind of run because I've been seeing some flow coming in on it, and I just don't see it going down too much more. I mean, how much more down is it gonna go?
How low can you go?
I mean, bro, we've had a recent highs of 400s, bro. Like what? You're telling me we can't fucking get there? We can't
There's
get
got
to
to be at least a
250?
bounce, the markets don't go straight down and straight up, There's got to
No,
be a
no, there will
little,
be a bounce. I'm
yeah, of
sure of it.
course. It's always an important question of where and when.
I think sound looks very primed here, if I'm honest,
So,
for a move. This will be the account saver trade right here.
we're not even down that much. I
No,
mean,
we're not. No, I'm saying like just bringing back all the losses that we did make.
yeah,
Our trade selection has been solid. It's just now we gotta fine tune it a bit based on. I mean, I think we've spoken about this. Our trade methods are a little bit different,
yeah, totally, totally.
but no one is right or wrong. I'm just saying that I think for us it was important to find like a middle ground.
I mean, I think the thing is, we took a few paper cuts because we did stop out a few names, but I think that, it's not necessarily a bad thing. It makes you flexible, but at the same time, you take a bunch of paper cuts. So, yeah, sometimes you got to let the winners play out. And I would say Oracle was one that we definitely cut out early. And
It was good to cut it at the time you did, but we should have reloaded because it was in a solid spot to be reaccumulating. But it's all good.
yeah, there was a bit of hesitation at the lows, which is happens, even.
Yeah, it's part of the game. I'm not tripping about it, bro. Like, god damn it. Every time I'm gonna take Corey off my watch list every time I see that shit. God, I told you the flow is so good on that shit.
You don't want to
There's
look at
no
Microsoft
way.
right now.
What?
Don't look at Microsoft right now.
It's about $500. Oh my goodness. That is crazy.
Oh, oh.
Nah, I mean, I think we sold at a
Nah,
good
nah,
time, honestly. If
we
I'm
got 70 handles on that piece.
Yeah, no, that's all good. I mean, bro, I'm happy. I'm happy with what we got. Can't get too greedy.
Yeah. I have a buddy of mine who was long Microsoft at the lows with me. Mm, he had about a quarter mil in Microsoft.
Oh, he's eating good right now.
No, he sold for like 15 handles.
What? Oh my God. He should have waited that one out, bro.
Made a quick like 20 bands, I believe.
Bro, if he waited, he would be up good right now.
Oh
He would be
yeah.
up. He would be up like 75 or 80,000, right?
Well,
Oh my! I know.
happens.
Is that Dan? Is that Dan?
I can't mention any names.
Oh, look
Yeah,
at
but
IBM. Look at IBM, bro. IBM's making a push, bro. What I
IBM.
say, bro. We're at one. Damn, 232, baby.
Oh, let's go.
Next target will be 242, in my opinion. So 10 handles from now, we can trim.
Yeah, I would say that's a
I think
potential
that's a
resistance
solid
point.
trim. We'll leave a runner for the rest. I think 255 will be a next takeoff spot.
Mm-hmm. 255.
Yeah,
Yeah, I see that.
beautiful, beautiful. Now that is what I call fucking beautiful trade management, baby. Oh, we'd be eating good right now.
Mm-hmm.
Fucking Z scaler, bruh. Dude, tell me I did not tell you this from the lows, bruh. Oh my god. Z scaler is up 30 handles from entry, bro.
Why did we not get Zscaler?
Because when you asked me about it, it was already made its move up.
Ah,
I spoke about it in the chat, bro. My
yeah.
original options entry was at
I,
132.
I think the issue was we're still trying to get the funds into the account.
Yeah, we weren't even in the IBKR just yet.
IBKR did it like a delay. I mean,
It's
because I
okay.
transferred from like a portfolio into my bank
No,
and
it's all good. I mean, there's gonna be more
ACH.
plays like that. There's always plays like
Yeah,
that,
yeah.
bro.
Yeah, very unfortunate timing, but there's always plays like that.
Always, bro. Coinbase, nice. Coinbase is making its move now. Let's go.
Let's see.
What's 151? Beautiful.
Yeah, we have about 50 shares on the account right now.
All it takes is one bounce from crypto, and this thing is gonna rocket, bro. Okay, beautiful. I mean, I mean, honestly, what do you think so far? What have you, any takeaways you've had from running this account now for what, 2 weeks, 3 weeks? Wins,
I mean,
losses, things we are trying to keep an eye on.
I'll say this: it is different managing this amount of capital versus my usual size because, again, I mean, it is on a smaller side of account challenges, and especially with equity, you can't. It's harder to maneuver with smaller amounts of capital. So I think discipline and waiting for the best trades is the key with this. You know, you can't be as aggressive, you can't be as bold with your trades. So it does teach you a lot of discipline and trade management. And I think going back to this small account, it really brings me back to the beginning times, you know, of my trade journey. So. But yeah, these days, you know, I'd be taking, you know, 25K is like really nothing, you know. I have like what 100K position on Tesla, and that's on a lighter side, you know. And
Well, hopefully we'll be able to scale this account quickly. I know that's.
I am long SpaceX too,
Are
but
you?
I am, yeah. I
You
have
are
about
ballsy, bro. I would not be touching that.
again, I'm not that it's about a 70K position. I mean, it doesn't make much. It's not a huge percentage of my portfolio, but it is a position that I have. But you know, I have my
What's your average?
like I think it was like 100. Let me see. Space. It is 110. Yeah, I'm long right now. It's 110.
Oh,
My
solid.
stop will be under 100 personally. I'm not going to take too much heat just because we do have insider lockup ending. I forget the timeline on that, but I do think that it's a good play to play for bounce. But I will hold some long term just because I have my own interests.
Yeah, but I mean, do you have any overall thoughts on the portfolio?
And with the portfolio, yeah, just hold the winners, hold the positions for continuation. Can't really chase anything here unless something pops up on a scanner, then we could potentially consider. Soundbase looks, Soundhound, sorry. Soundhound looks good. About 640 right now. Our average is around, yeah, basically break even right now on Soundhound. I think, I mean, what, 43% short float? Like, how much lower can it go? Like, what, you're shorting here, and were you trying to go for a dollar or two when we have
Yeah,
so much?
not into any dark pool accumulation. They're tripping.
Anyone short Soundhound here, I don't know. It's not.
You might as well just let me put up my Cash App in the screen. You might as well send that money over to me because that would be a
Yeah.
terrible mistake.
Yeah, I mean, there's a lot of risk to the upside at this point. It's like, come on, shorting sound here. I mean, I think it only takes a little push, and then we'll see everyone running for the door because you know whenever people cover their shorts, it is a market order. You know, everyone there's an exit, the door remains the same size, and everyone runs towards it. You know, and if we do see some short covering, I think it cause quite a big squeeze because everyone's running for the exit and everyone's hitting the market price. Oh, that's going to be quite ugly. Well, I mean, the general benchmark is to beat the S&P year over year, you know, or outperform the S&P in general, you know. But again, the bigger the percentage, the better, obviously.
Right.
Um, Again, it was a very rough start. I mean, we are in the middle of summer trading, so the opportunities are not as great, and liquidity is very low volume. So it is a bit harder to. We did pick the more difficult season of the year to start the
Yeah, but
challenge
if we can
account.
outlast this season, we are showing. Obviously, we know what
Of
we
course,
got
of
something.
course. I mean, you know, the choppiness in the account is was to be expected. You know, I wasn't surprised, you know, in its point of summer. But yeah, I mean, when I first started out, you know, I would say, ooh. I was like 20, I was trading futures 2018. Yeah, I would say like when I first started out with swing trading and equity swing trading, it really depends on the year, market conditions, I mean, 2020, I would say I had like a 2x on the account. 2021 was a 3x. 2022 was the only bad year, but I was very heavily long SoFi and that killed a lot of liquidity and yeah, it took some heat. So end of the day, it's all about managing risk and yeah, just have a conviction. Let's see.
Cool. Any other thoughts? I gotta take a shit, bro.
I think, hmm. Yeah, I think that's pretty much it. I mean, it's not
Cool.
really much else to say, but yeah.
All right, big boss. Well, just call me later, bro. If you want to talk about anything.
Yeah, sounds good.
All right,
All
my
right,
boy.
guys. This was the fuck. All right, guys. Thanks for joining us, and I'll see you guys in the next one. Yeah.
I mean, shit.